To be with you guys here this morning. Had a lot of plays that we've been looking at on the intraday side of things. So let's just jump right in. Obviously, guys, it's not the best conditions for our strategy here. It's the end of the quarter. It's the end of the month, fiscal year. I mean, you name it. You got big data at the end of the week. So the conditions are likely to get more and more difficult as we get towards Friday. That doesn't mean that there's not opportunity. It just means we need to know where to look. Okay, so the dollar crosses, while there are some that we're looking at, you can see that the swing side of trades is also still looking for dollar yen, Kiwi dollar, euro dollar, and these will all come into focus as we head into Friday's major event risk. You might not even get a play. Again, the focus for the Fed hasn't really been so much on employment. As I said in the webinar yesterday, I think the risk is to the downside if we do get a bad print. That being said, we'll have to see where we are on Friday morning. The focus for me has been outside of the dollar crosses. Okay, so the sterling, Oz had a beautiful play. The sterling CAD had a nice play. Euro yen a little bit lackluster, but you got a very clean break of the opening range for Asia, which took you right out of the near-term formation we were looking at. That saw a massive drop. We even broke the opening range low on that one. We're about to review that. So there are some plays. We just need to know where to look. I do like the Aussie setup. It has come into that major near-term support that we talked about on yesterday's post, or the last tweet on the squawk. So that one's also in focus, but I'm hesitant to continue to play this short side at these levels. Okay, so we're gonna start to lighten up on that Aussie short. Pretty close. Let's jump right into the charts. As always, guys, questions, trade setups, pairs you're looking at, feel free. Eileen, good morning. Great to see you as well. Petro says, good morning. I wanted to ask you if you would have played the sterling Oz and sterling CAD longs, although there was that divergence. So, Petro, if you read the notes yesterday, actually on both of those, we were noting that there was a possibility for a turnover because of those divergences, right? And, excuse me, when the opening range broke for Asia, that's really what cleared the way for the directional bias. So, Petro, you don't have to make a decision if you're seeing divergence. Do I take that trade because of the divergence? If the trigger comes, then the trade is operative, and the divergence adds further conviction. He says, I know the trigger gave out, but late. Yeah. So we'll take a look, Petro. We'll walk right through it, and then you let me know if you have any questions, okay? First things first, just want to get through this euro yen. So here's where we were last night. It was sitting on 129.88. If you guys remember when we opened up on the Sunday note, we were talking about this being near-term resistance at 129.90. Here's your Sunday open, this vertical line. Hope you can see that at home. We sat right there, went for a tag of the median line. 29.32 was support. Bottom line is the breakout here would have had us targeting this level. Now, though broader trade is still bearish, right? The swing trades are still holding on to shorts here, actually. And we were looking for that break below 129.90 to get us on the short side, but on the break to the upside here, right? Although it was breaking the initial Asia opening range, momentum held 60. And I said that yesterday in the piece. That's not something that's comforting for me, especially if you're breaking an opening range or resistance. So there was, there was enough to warrant caution here, okay? And then you even had divergence on the press higher here into the end. So this trigger did give out, but again, it failed at 60. So even as it looked like it was breaking 130.16, which was the open high so far for the week, even on that break, momentum couldn't get a close above 60. And eventually, the trigger gave out to the downside. So when the trigger gives out to the downside, you see a break of that near-term formation here. Okay, it even cleared that 38.2, 129.90, former resistance, now support. That opens up a drop. Okay, the initial target was right here that we highlighted on the piece. That was just above 129.32, which was the opening range low for the week. We sailed right through it. And nice confluence support here. So now we're looking at a 618 retracement, a little bit more significant of a level, and that comes in perfectly in line with the median line parallel. I mean, these types of setups don't happen quite this clean as often. So we want to make sure that we're paying attention when we see this kind of reaction. Momentum really just mimicking what we're seeing in price as far as this being a near-term key support. So where do we go from here, Mike? That's what matters, right? Here's what we're looking at. Again, I'm going to be a little bit hesitant to press anything into the last day of trade, guys, for the month. I've really been stung, just as a word of caution to you guys, over the years, I've really been stung on days like today. So I tend to play a little bit closer to the chest. That being said, this is going to be your near-term bullish invalidation. So you could see a rebound here that takes you back into the median line resistance, back into 129.30. Check the opening range low. We'll be looking for shorts in that region. We'll be looking for a momentum hold at 60 in that region. But at the end of the day, downside break, you're looking for 128. Okay. A quick look at the relative performance for the U.S. dollar. I did tweet this out earlier. Okay, you can still see that heading to the U.S. session, the dollar is still stronger against most of its major counterparts. I did want to just see what the dollar yen is doing. Didn't take a peek at that this morning before I came in here. Okay, so we're still holding within this confine here. So dollar yen, another one also coming into some near-term support, maybe a little bit drift lower, 119.76. Coincides, with a possible pullback here. Maybe check that median line again in euro yen. Long story short, this is the focus here. Resistance 129.30 or a break below. Basically last night's session lows, 128.60, and that'll open up, 60 pip move to the downside. Remember, a quarter of the daily ATR here is only about 44 pips, so we want to keep that in mind. Any questions on euro yen before we move on from last night's piece? So remember, 129.30 was the bullish invalidation level. Again, that was the opening range low. That gave out. You want to stay bearish below this region. If we clear this, I'd be comfortable playing this right back into 129.90 again, to be frank with you guys. In fact, such a scenario will probably, let's clean this up now that we've gone through this setup, would probably give us a new median line formation to work with. Maybe something like that in that kind of scenario. I'm just playing devil's advocate here with you guys and telling you where we would look. Right now, the focus is going to be right here. All right, so that is euro yen. Good morning, Michael, says Philip. Hey, Philip, great to see you. He says, by trading, quote unquote, with hands on your chest, do you mean you trade with a lower leverage or you mostly don't trade at all the last day of the month? Philip, to be quite frank, again, personally for me, it's all about the setup. If there's something there and there's a trigger there, I'm not going to sit in my hands just because, it's the last day. If it's something clear, I'll jump in, no problem. But definitely on the leverage side, half of what I'm typically trading, It's just not worth it. I've had bad experiences. Again, maybe it's a personal thing with me, but near-term trading, you want to kind of be comfortable in the environment you're in. And I just tend to not trust these moves at the end of the day, at the end of the month. Whether it's rebalancing or whether you want to blame it on, people squaring out positions or whatever, I don't even want to stress all that. The price action can get very, very, a lot of whipsaw. Do you know what I mean? You'll get your stops triggered. You'll get a lot of longer wicks. You'll get a lot of pullbacks that you kind of just drift through a resistance or support, and you don't really know if it's a break or not. Obviously, this is not a constant, guys, but this is just something I've personally experienced over the years. So, again, we'll take every setup on its merit. Lighting leverage is definitely not a bad idea. Again, it's based on the own merits of its trade. So, Philip, if it's a strong signal, it's a clear setup. I'm going to show you some setups today. Again, most of the stuff on the intraday charts, guys, are ridiculous as far as how clean these are. Let's jump into the sterling Oz. Chintan says, little late. Can you look at Aussie Dollar if you haven't gone through it yet? For sure, Chintan. Sure will. Let me just get through these next two sterling crosses. So, sterling CAD, for example, who was asking that question? Philip, is a, it's so clean. Do you see this setup right here? This thing is ridiculous. You had some divergence into the highs. It looked, an overnight trade, like you could see this thing turn over. And the opening range for Asia was so tight, right into, essentially like an hour before Europe opened, this thing held a ridiculously tight range, right? Momentum, we were looking for that 50 break and a break of the opening range low. I said as much last night. Basically, that's what would have set this thing off. If we go sub 50 in RSI and a move below the Asia opening range at 87.60. Do you see how clean this thing held, 87.60? I'm going to put my cursor right there to the right. Do you see that, guys? Even though momentum looked like it was breaking 60 here, or 50 in momentum, excuse me, price still held that opening range low for Asia. So for this one, the trigger never came on this short. The thing up and jackknifed right through. You saw a breach of the Asia opening range high. You're looking long. It's a perfect long trigger with a super tight stop considering you're looking for 45 pips. Initial targets, right on the upside, 88.32. And a break above that, you're looking for the 38.2, which was 188.88. Okay, and both of those hit, just ahead of this reversal here. Now, a little bit bigger of a range of resistance. Why? We identified this yesterday. If you zoom it out, it's the same. Actually, I'm sorry, this is not the new one. This is the same one we've been watching. The parallel off the highs from February. Okay, and there's the median line coming right in line with that 38.2. Overshot it by a little bit, but again, we're operating on a 45 pip limit here. Every time we book 45 pips, we take it. So, Petro, your question is, would you take a trade like this if there's divergence, right? Because we talked about it in the report. We said, you know what? There is divergence into the highs here, and it did turn over, and we're sitting at the lows. So there's a possibility for it to turn over, but the trigger never came, right? The trigger never came. And in fact, not only did you not get a short trigger because price never broke the opening range low, but you got a long trigger. It up and reversed, took out the opening range high, and momentum went right through the resistance trigger that we were watching. So whether you took it on a break of this, which was the ideal type scenario, this was right, again, like an hour ahead of the European Open, or whether you took it on this break, which would have been a harder stop to manage, but it would have been against the European opening range low, so you still would have maintained, at least a 45 pip stop. Both of those triggers would have been operative in my eyes. Okay? Remember, divergence is tricky because, and this is why, guys, we don't use divergence in and of itself as a signal. This is why guys who are teaching or guys who are learning, divergence and momentum and all this is why they get led astray so hard, because divergence doesn't necessarily play out in the way that you think it is. This divergence signal could have been this decline. That's all it could produce. Why? Well, because when momentum is waning and when price is pausing, naturally you'll get divergence because you're coming from a very extreme level. So my point being, and I hope I'm not confusing anyone, my point being, we don't use divergence in and of itself to put us in a trade. When there's divergence into a trigger break, 9 times out of 10, we're all over that trade. Okay? So if there was a support trigger here, for example, and there was this divergent signal into a support trigger, even on an extreme scale, Philip, even on an extreme type of play, that would have been an operative signal. Divergence into a trigger break. And in fact, you would have been able to squeeze out barely the 40 pips, but you would have gotten it. You know what I mean? So I hope that offers some clarity. Let me know if that makes sense, Philip, on that. Very good question, though. I hear what you're saying with the divergence here. Would we have taken this long? Yeah, because again, this was an independent break of an opening range for Asia Pac, and in and of itself, on a 5-minute, let's see what the trigger looked like. Excuse me. Okay, so here's the Asia Pac Open. You see Sydney in light blue, Tokyo in dark blue. So the entire Tokyo-Sydney market up until 2 in the morning here in the United States was defined by this region. And that's what we're looking for to clear a near-term directive, to get a near-term bias. And then you're looking for momentum to confirm that. And if we look at this, and I'm just going off the cuff here, guys. I did not take this trade. I was fast asleep. Yeah, to me, you know what the trigger would have been here? This trigger gave out early, okay? And that would have been like the ideal entry because you're literally right off the low. You're not always going to take that because you haven't cleared the opening range yet. So let's be realistic. The trigger gives out. It breaks 60 on the first attempted move above the Sydney-Tokyo opening range. That's a pretty tight stop. That's a change in behavior for momentum. And that's a 40 hold the entire time on this 5-minute chart on this pullback. Do you see this, guys? What is a 40 hold indicative of? Near-term pullback within a broader uptrend. So right off the bat, you're seeing defensive 40 in momentum, very, very clear-cut opening range for 2 sessions. That topside break would have triggered a very nice long there. Does that make sense? So I want to make sure we're all on the same page there. So at this point, the possibility for a material pullback is there, especially with this kind of reaction that we're seeing at the highs. So I'd be looking at stuff like this. I don't know, guys. Again, I don't know if this is going to produce a decent environment for us to start shorting because, again, now your stop is basically, as it needs to be up 89. So we're already out of range for trying to short this. We could get a nice pullback into the U.S. Open, okay, and maybe a 930, 945 break again, or push into these highs to offer another short trigger would be great. But even that, we have to be nimble on the way down, okay? We would only be looking to play it towards that median line, wherever that comes in time. At this point, again, we want to adjust our levels. I'm not a big fan of stretching to every new high, guys, but when you make a peak, it's good just to have the reference points there. That's why you'll see them on the charts really light-colored. I'm not really stressing it, but I do want to know where they are, and especially if they coincide with some key levels. And if we do this to stretch to the new high, you can see that the 50% comes in just below where we were looking there. So near-term support and bullish invalidation. Questions on the sterling CAD from last night? Petro says, yes, got it, thanks, right on. What is the real entry, the time when the trigger breaks or the price breaks, the OR? What is the real entry, the time when the trigger breaks or the price break in OR? So we're always stressing price. You're never going to stress the trigger. Guys, RSI, we talk about it a lot because it can be very telling what's going on in the momentum profile, but it's still a lagging indicator. It's only telling you what's been happening. So price is going to be always the determinant. On a trade like this, if you don't get the initial breakout, I'm very rarely going to chase these. I'll sit in this and I'll watch it for another 10, 15 minutes, wait for some sort of material pullback, and try to get back as close to that trigger. That's the one thing we don't talk about here, guys. I really want to stress. Great question, Philip. Guys, it's always going to be better to play on entry on the pullback after the break. Unless you get unless you're really there for this break and you're fast, quick enough fingers, which happens a lot if you're sitting there watching the charts and you see the break and momentum is right in front of you. Yeah, sometimes I'll just jump right into this, but 9 times out of 10 you'll wait for it'll make the break. With the next couple of minutes, you'll see some sort of material pullback, and you'll try to get back to that entry as close as possible. The trigger has already given out on the way down here. You've already seen that confirmed, and you're just waiting, to get a better entry to actually play the upswing. Philip, does that make sense? That's always going to be your preferred method on a break of an opening range, rather. It's always better to buy into support or buy into a pullback and sell into resistance. It's always going to be better than trying to buy the breakout. It's never going to be easy to do that, guys. So we're so near term. We don't need to make that assertion. You're not working with a 20. You're not working with an hourly 2-hour chart where you have no clue where you are. It's just above resistance, so you want to buy. We're watching this. So if it's a stretch data type print like this and you don't catch the initial break, you're done. There's nothing to do here. On the upswing, maybe on this last upswing here, we get a short trigger. We take it against that high. It always is paramount. Risk management is always paramount. So if you're ever wondering, oh, should I take the trade here on the break or should I wait for the pullback? Just sit back for a second. Where's my stop? Where's my stop? Could I improve that? Could I make that stop tighter? And a lot of times, guys, you'll see, I mean, even if you go on the feed, I don't want to sit here and scroll back too long, but I mean, even if you go on the feed on those charts that we posted last week, you can see I took a couple 10 pip hitters, 13 pip hitters right before we slammed a 60 pip winner, and that's okay. I'd rather take a 10 pip stop here or 11 pip 15 stop here and then hit the scalp with a nice full position than sit there and try to play the break, because that's never going to put your risk to reward in a favorable position. Does that make sense, guys? I can't remember where it was. It was one of those charts, but you guys get the picture. Oh, right here. Here's an example. So this is, for example, what was this? This is Euro Dollar on a scalp that we did last week. Here it was. We took this thing had some divergence into the highs. I took a short against the opening range high. That blew through, took me up for 13 pips. Okay, pulled right back. On the upswing again. Here we are, a divergence after the signal. We jumped right back in. Stop against the highs. There we go. Okay, and then we took off some here, and we took off some on 1030 and so forth. But you get the picture. You're always going to be better off waiting for the break and the pullback than trying to get in there on the straight breakout. I think I've stressed this enough on this point, so I'll move on. I hope that helps you guys. Andrew says, enter long on sterling dollar on a break. Thoughts? Sterling dollar, I haven't really been too keen on, just because of last week's price action. Never did anything, and in fact, as you headed into Thursday, it looked like it was going to break the opening range low, and then divergence into the low when we came back and right there. So here's the open for the week. You can see I haven't even been following it this week, but there it is. So this is the opening range for the week. Look, you got some UK data in overnight trade. The GDP figures were slightly stronger than expected. Here's what that looked like. GDP quarter-on-quarter final read for the fourth quarter came in at 0.6 versus the 0.5 expectation. You're expecting a hold on the year-on-year figures at 2.7. That got upward revised to 3%. We just got, Carney the other day, again reaffirming that the next move from the BOE will indeed be an interest rate hike. Take that for what it's worth. You could see a little bit of a topside reaction, but don't forget where the dollar is, okay? Here's the dollar index. We've been following this one closely, guys. That slope support has produced a jump or a rebound or whatever you want to call it. So I do think this thing could stretch a little bit higher into that trendline resistance off the highs from March. But I'm not too keen on trying to necessarily fight that yet. So when we look at a trade like that, who is it that did that? Andrew. When you look at a trade like that, the only thing I want to comment is this. I don't buy because price is simply at support, and I don't sell because price is simply at resistance. Our strategy from the intraday approach, or at least the strategy that I work with here, is we need something to put us into that position. We need something to tell us that we're at a low, because we're so near term that if you try to keep buying every time this thing comes into support and something's on a real strong trajectory, you're going to get smoked, right? And it's the last thing you want to try to do is start calling lows. So I'm just going to prompt you on that. I don't have a reversal signal here yet per se to tell me. I do have a couple of things I'm looking at. There's some divergence into the lows, right? Price action's making a lower low. The oscillator is making a higher low. There is a trigger that's in play. I don't know if you want to call that a break per se. If you take it off of the high that you made from Friday, it looks like it's broken, but price hasn't. So I don't necessarily have a trigger that I can say right now is putting me on the long side, which is why I can't necessarily advocate that. It might work out. It might be a beautiful play. I don't know. But my strategy requires me to take a little bit more of a disciplined approach and have to wait a trigger out or something to tell me that this thing is gonna make a move. At the end of the day, if this is an operative formation that we were working with, which you do have some really nice triggers on it or inflection points on it, then yeah, you could get a rally back to the underbelly of it, but if this break is legit, which we tagged it as resistance, the near-term focus is still weighted to the downside. So just be nimble on it. Does that make sense? Andrew says, great, thanks. Cheers, mate. I'm glad. Awesome. Hey, Sandy, great to see you. Okay. I'm running behind on your questions, but I promise you we're not going anywhere until we get them all out. So that is, what was the last one that we covered? It was Sterling CAD. Any questions on Sterling CAD before we move on? A quick glance at Sterling Oz, which is just as beautiful, and then we'll move on to your questions here on any pairs that you want to look at. Again, 88.32, the same target that was from last night, is near-term support. Those are the opening range highs for the U.S. session yesterday. And again, on a downside break from here, we'll look for that possible move into 87.60. Again, that opening range low. This is where you want to stop, check yourself, and possibly look for new longs if we get this break. At the end of the day, guys, this is an uptrend. We don't have any triggers on the short side yet. I'm just playing the scenario here for a near term. On the daily chart for Sterling CAD, this is the level I'm looking at. So that still takes us a little bit higher. All right, Sterling Oz. What a beauty! This thing is was like textbook. So 93.40 to 93.18 was a major level that we were looking at. We broke through it. We checked a near-term upper median line parallel, and then we came into its support. And Sterling Oz, start off on the daily real quick. This was the focus. Okay, remember last week we had come right into 92. 92.25, this region right here. We actually gapped, checked it as support, set up a nice range here, and the trajectory for that near-term pitchfork was just very, very clean. Very, very clean. Here's what it looks like on the intraday. I mean, guys, you can't make this stuff up. So here's the upper median line parallel that we were looking at. There's that pullback that we were looking at in the report. Held a support like a charm. Momentum turns ahead of 50. Didn't have any triggers on the 30 that would have been too compelling, but most of those came by way of near term of the 5-minute triggers. So here was actually a really, really nice trigger heading into the New York close. On a trade like this, guys, is the ideal trigger. The ideal trigger. So you had like a 3 or 4 point trigger here. It breaks. Price action, if you don't get the breakout, comes back, pulls back. On the pullback, momentum finds support at the former trigger resistance. And guys, this is the entry. This is like the ideal scenario for an entry. Because it's also still the opening range for Tokyo. So you slammed into a new low. Momentum holds 40 on that pull. Holds former resistance. Boom. That's an ideal entry for a long side. Other than that, you had just these little ones here that were really good. You're just looking for 2 or 3 points on these 5-minute charts. That came into a low. Again, a stop against the intraday low for the Tokyo session. That would have been another opportunity to get in the long side. Long story short, from where we are now, from where we are right now, you're seeing some divergence into the highs. You're seeing this thing start to turn over. Every subsequent high that you've pushed for a new session has been smaller in magnitude. And price is out of the key resistance. We highlighted this level yesterday on the report. It's 94.60 and just above into the 95 handle. Now, if we zoom out, you're going to see how significant this region actually may be. And this is why, again, I was telling you at the very start of the webinar, it's for me today, on a day like today, where we're coming to these key thresholds on the last day, into the last day of the month, I'm going to be very, very cautious. But I don't want to mess up. We've had some really nice runs over the last couple of weeks. So 94.60 into the 95 handle. You see this median line? This is way, way, way old. Okay, this dates back to the lows that you made back here in September of last year. The lows almost precise on the rebounds. The median line comes right in line with current median line resistance for the operative one that we're in. Add to that the near-term one, right? So there's a lot up here. There is a lot up here. So I'm not touching the long side unless we break through that. Like I said, maybe if you get a pullback into the median line and here you get a compelling long trigger, yeah, that might be worth a play. But, you know, this is pretty big here. This is pretty big here, this resistance in my eyes. So watch the long side of sterling Oz from here. If you break through 95, you know, you probably get a run right into 95.65. Remember, you're looking for about 50 pips, so it's a long-range scalp. You have the room. And 96.33, I'd be greatly watching the Aussie dollar. And Chintan, you want to take a look at the Aussie dollar, so let's segue into that real quick. Because obviously that's, you know, weakness there has been, you know, helping us assert the long side here. So here's what Aussie dollar looks like right now. By the way, 94.60 is also, aside from all those trend lines that we just lined up, there's a 618 retracement of the decline, in case you needed a significant fib to add to that, okay? And we're still getting ongoing divergence along the highs. Be cautious of the highs of the long side of sterling Oz. Here's what Aussie dollar looks like on the daily. It's pretty darn ugly. I don't know if we should be stressing anything here per se. You know, we're back below that median line, so any type of expectation that we could see the recovery really start to gather pace more is kind of right out the window. We've been playing the short side since last week. Yesterday in the webinar, we talked about near-term support, excuse me, that we were coming into right as we were coming into 76.60, 76.50, which was, you know, a nice confluence region here of support that we had noted on the daily FX report last week. So resistance, 76.60. I tried to give a heads up on that last night. So I put out this tweet last night, and it was just as we were coming into that 76.60, and we kind of failed again, right? Well, it turns out that that actually was a hold, and then we saw the break of the U.S. opening range lows. That gave out stop against 76.35. Stop again, excuse me, against the high 76.60. You're looking for about 30 pips. The thing came right into that near-term support target, 76.10, 76 handle, and that's where we're sitting right now. Okay. The plan is exactly the same. Nothing's changed. So if we see a topside break above 76, let's call it 76.15. It's the opening range high for Europe is still up here. Well, if you see a break above 76.15, it's going to necessitate a move through this median line parallel. You would expect at that point, again, we may see another tag of that 76.60 level. But this now, we're lower from yesterday. We lower our bearish invalidation to here. Okay, so if it plows through 76.60, then you're looking at a little bit more of a broader reversal play off this decline. You can see this thing probably rally back up into 77.50 or so. At the end of the day, if we do break the lows, the next downside target is right down here at 75.60. Another 40 pip run to the downside if we break US to the downside. Again, a quick cautionary note, I don't like these triggers that go into way overbought or way oversold territory or vice versa. So just keep that in mind. I'm going to take this with a grain of salt. But those are the levels unchanged. I mean, the same levels we were looking at yesterday, guys. They're very clean here on the Oz. Now, once we make that break, now we have to reset these levels and take the retracement of just that leg down to see if we get any confluence there. All right. Philip says, thank you, Michael. It was quite confusing. Now looks simpler. Usually I chase and fail, so I needed to know. Hey, ask the questions here, guys. There's nothing that's off guard. You can ask whatever you want. Remedial question, when drawing a pitchfork, do you determine the high and low points? How do you determine, the high and low points for the fork? Yeah, someone was asking that earlier. Guys, it's not really... Well, let me take a step back. Typically, if you're using extensions or retracements, typically those reference points will inherently be points that you're going to use for some sort of pitchfork. But it's more of an art than it is a science, guys. I don't want to tell you to necessarily structure it based purely on a high-low high or high. It's really about the slope of the market. As opposed to the reference points you're using, we want to be stressing the slope. So how many tags of that clean slope do you have? How many inflection points off it do you have? The more tags, obviously, just like basic trendline support, the more tags there are, the more conviction you have on that slope being something that's actually guiding markets. I know that's not a satisfactory answer. I wish I had something to tell you where this is an equation you can plug in and it's going to tell you the exact reference points you need to your Pitchfork, but it just doesn't work that way, guys. So, bring up a pair, guys, and we'll bring up a chart from scratch, and I'll move it through with you. We can kind of go through it together. There's not a very easy way I can sort of break it down for how we find these reference points. A lot of times it's eyeing it out. You literally need to draw it and adjust it and look and see how many inflection points you used to get. I used to be the type that was super, super rigid. It needs to be a high, low, high. But, guys, that kind of stuff, you just miss opportunities because you're so obsessed with trying to pick which is the right high to use that you're missing the basic concept, which is trying to find the right gradient. Do you know what I'm saying? You're trying to find the right slope that the trajectory that the market is following. I hope that makes sense. Okay, I missed these comments earlier, but I guess this was when we were talking about the triggers. Philip was saying exactly, it's very hard to set a reasonable stop when there's a breakout. That's when we were talking about, playing the pullback of these breaks to get the entry. So 100%. Eileen loves it. Always great to get your feedback, Eileen. Always good inside. Thank you, Michael. Petro, I appreciate that. Insight, excuse me. Sandy, I got you. Philippe says, a question about the Sterling Oz. Was there another trigger in the 5-minute about 1 hour after the London start? About 1 hour after the London start. You could have been using something like this. Yeah, I mean, that could have worked as a trigger. I typically wouldn't take a trade like that just because you're heading right into 70. Sometimes I'll use 70 break as a trigger in and of itself, but I wouldn't take a trigger that's eyeing a 70 move just above it. So I don't know if there was necessarily a trigger here, but, I mean, depends how granular. Yeah, I guess a 1 hour into London. Yeah, you can even say something like this. This is a 1 minute chart, so we're not an hour into London, but, something like this. No, there was nothing here that I could see that I would be working with. And honestly, an hour into London isn't even enough time to set the range. You would want to let the London Open give you something. So, yeah, I don't think there's really much here that I would have worked with. Not from London Open. The last trigger that was really compelling here was that trigger for the opening range for Asia Pac. That was sort of the tell. And then on the pullback, again, the momentum barrier finding support. It's not going to mean exact science, guys. If it probes below 40 into 35 or 36, we're not going to call it a reversal. But you get the picture. Stefan says, sorry, I'm tardy. I typically draw them by parallel slopes first, Stefan. How about determining the fib? So, yeah, you can do that as well. You don't actually need to even use the Pitchfork tool to do median line analysis, guys. We're looking for pivots. We're looking for inflections. We're trying to find the slope of the market. Eileen says, I have to head out early. We'll catch the recording. See you tomorrow. Have a great day, and thanks for the caution. You're more than welcome, Eileen. We'll see you tomorrow. Pooja says, I'm sitting in an Aussie yen short from 91.58. Let's take a look. Okay, this is obviously not updated here, Pooja, but we can do something for you real quick. Oh, you took that. Oh, that was actually a great entry. Was that last week? Oh, I'm sorry, 91.58. 94.40. I was like, what? All right, 91.58. So you're going to write about here. Opening range for the week kicks off here. Nice support break in momentum after a 60 hold on the highs. Very, very nice. Very, very nice. Puja, I like it. Median line of short-term Pitchfork from 23 high, 24 highs, just below. I have booked 33 pips on a third of the trade. Super clean. Yeah, I see what you're talking about. Yeah, I'd be starting to clean it up too. So you're getting some divergence into the lows here and momentum as well. But here's the thing, guys, we want to be mindful of when we're exiting trades. Sometimes when we're in a scalp, the momentum indicator, because we're so close to markets and we're following it on such a near-term time frame, will start to look like, hey, red alert, jump out here. When you need to be mindful. If I take a trade, let me take a step back real quick, guys. So we use opening ranges on a weekly basis. We use opening ranges, hell, on a session basis. But what you don't know sometimes, that opening ranges even sometimes will pan out on an hourly basis. So if I take a scalp and I'm pushing through into, let's say I take a break of the U.S. opening range and it's like 10 o'clock, 9:45, right? And we're in the position and we're in the 10 o'clock hour. I typically will try not to exit that trade until we get into 11, 11:15, see what the first 10 or 15 minutes is of that hour. If that opening range on a 1-minute chart or 5-minute chart breaks to the downside, then I'll hold the position. If we set a range between 11 and 11:15, 11:10, and then that range breaks to the upside, typically that's when I'll start to chip away at the trade, bring the stops down, etc. So, very rarely do I only want to jump out of position at like 11:30 or 10:30 or something like that in the halfway through the hour. Just as we use opening ranges because the tendency for markets to open and close on the extremes, that also holds true in the tighter time frames as well. Again, not a constant, but nothing in trading is. So be mindful of when you're jumping out of those positions. Long story short, what I want to say to you, Puja, is if this does break this formation, the strongest moves sometimes on a trend, or this happens a lot, is when a down-sloping formation breaks to the downside, or an upward-sloping formation breaches to the upside. Those sometimes can be the sharpest, right, hyperbolic moves in the market. So I just want to warrant you on that. You already took off a third of the position. That looks, makes sense. I would chip away a little more if we get any near-term retracements here of magnitude. You should have a 618. Oh, you're just below it. Wow. Some downside targets for you there. If it breaks, 90.65. Wow, it matches that low almost perfectly that you made in February there on that swing. Bullish invalidation. Honestly, to protect your profits, I'd probably have it somewhere ahead of your entry, which was 91.58. 91.40 is where that 618 is, but I'd probably have it above this high right here, the swing high that you made for Europe. The bearish invalidation level is right here in this pocket. That's how I would play it. So you look lower, you look for short triggers while below this, a downside break from here, you're basically looking for the 90.65 level. And near term, you are at support. You're absolutely right. You also have some divergence there, so be careful there. Should you get to near-term rebound, you kind of know what to expect. Puja, beautiful play. Well done. Well done. Let's do Sterling Key, says Petro. Let's take a look. Puja says, great help. Thanks. Hey, you're more than welcome. Sterling Key, I was talking to another trader about that on a different desk. Yeah, I mean, so guys, before we do that, real quick, Kiwi Dollar. So you guys remember this was on the scalp chart or on the scalp page all last week, and I think the week before even we were following it too. I kind of left it off because the decline has been painfully slow. I mean, if you don't mind sitting in this for a few days, you'll get your 30 pips, but it's like watching paint dry. So the levels are super clear. It's just the momentum has no conviction. And this is only going to get worse, I think, as you get into the NFP print. You might see some volatility as markets thin out into the open of the month, into the close of this month, into the quarter, etc. But, again, I don't trust those moves so much. So the major key support that we talked about yesterday was 94.50. Looks like we just scratched that. Looks like the low, somewhere in the range of 94.55 or so. In any event, use caution. This is near-term support and is one of those major key inflection ranges that we've been watching for the Kiwi dollar for months. It's the same slope of this craziness that we were following. You guys remember that? It's the same slope. So, the shorts come into risk as you head into 74.26, and that's sort of my issue a little bit with the sterling key. I think Kiwi could get a bounce here. That would sort of limit what's going on the sterling key side of things. But on its own merits, here's what I'm looking at with sterling key. So does that make sense? Just a quick picture here on, excuse me, on the Kiwi. I'm losing my voice quickly this week, guys. Sorry. So on the daily, let's just play with this for a couple of minutes. All right. So at the end of the day, March trade for the sterling key was probably just one of the cleanest opening ranges that you've seen in a while. Granted, the monthly opening range was huge, right? Probably the largest that we've seen in a while there. But the break below the 20 handle, which was also a longer dating trendline resistance that we've pivoted on multiple times, was the tell. Sorry about that. So the downside break here into a late month low was well played. From here on out, again, we're just opening up March trade. I do think it can stretch a little bit higher. It would require some more Kiwi weakness, and Kiwi's at support. So let me see what the near term looks like on sterling key. So always, guys, whenever we consider a trade, always, you got to take a look at the daily chart. Before you even look at what the near term is doing, know where we are. Where's the range for the month been? Where are the highs and lows been? For the year, where the hell are we? Actually, we didn't do jack because we opened the year right here, guys. So we're basically, 200, 300 pips off where we opened the year, despite having a 250 pip daily ATR. So keep things in perspective, right? Anyone who's been, whatever their opinions are on the broader fundamentals or technicals, whatever, we haven't done anything so far this year. We're in a clear-cut range, okay? Now let's jump into the intraday chart. Sterling key. Oh, sterling key, what are ye doing? Okay. So we got some plays off this here median line, but I'm not really going to stress it. We'll work with this operative one. And in fact, if we take a parallel, again, this is sort of a getaway to do it because you can't copy parallels on market scope, but make do with what we got. A parallel off that low. Looks like it just, looks like it just caught that low. So again, faith and conviction in your slope does have us coming into near-term resistance. I bet you, if we tack on a quick retracement, we'll have a confluence region here soon. Again, 38.2 comes in line with 99.15, 98.90, which is a region that we were watching on the way down here. It's also the 1618 extension from the decline off the highs and a 618 off the low. Perfect. Those are huge, huge confluence regions. And on a break of the median line, that will be the target to the upside. It also coincides with the former lower median line parallel, which is now resistance, and that's right up here. So we looked at the daily chart. It looked like there was room to the upside, right? We're looking at the intraday chart. Looks like if you're coming into some resistance, but you have a very clear-cut level of which, if we do break to the upside, you would be looking to target. Let's see what the open so far for the week looks like. So here's your Sunday open. Okay, so a quick tidbit. So we were asking questions earlier, about how to draw pitchforks. It always starts with a 3-point reference, but then you just got to mess with it a little bit. You got to kind of just tweak it and see where the market finds, or what slope finds the tightest reference point. So at this point, I would personally have a near-term bullish invalidation right around here. If you do get a break below this region, you probably see a nice little setback. I don't want to stress this 764 anymore. Yeah, but that's what I'd be looking at. Who asked about this? Sterling Key. Petro. Questions, Petro, on this? Thanks for that. The reason I wanted to do Sterling Key is that I fell in love with Sterling Cross's healthy ATR and usually clean levels. The more the better, right, Petro? And I'm always going to try to steer you guys in the right direction. Trust me, you're talking to a guy who stares at charts all day long, so it's in our best interest to have charts that are moving. Otherwise, it makes for a pretty boring day, so I'm with you on that. DB, can you look at sterling yen, euro yen? So euro yen, we looked at the very beginning of the session, DB. I'm going to let you review the archive at your pace. I'll have that up as soon as we're done. Sterling yen, I do want to definitely cover because this was something that we followed all last week. So, guys, I try to leave the links up for you. If you scroll to the bottom of the page, you can click on the previous charts. I leave these up because the broader scale charts and the daily charts will be active for a while, even though the actual metrics of each scalp might have shifted as we made new highs and lows. These can be good reference points. So here's what we were looking at, last week with the sterling yen. Here's what it looks like this week. I just want to zoom this out and kind of show you where we are in prospect. So again, the major key support that we ran into, 76.57, 76.28, is what charged the rebound. And this is kind of why we left off on not keeping it on the intraday this week, because rebounds are never something that is necessarily going to be an easy scalp, guys, on a broader turn. And I think that's what could be happening if this thing mounts 78.35. So you saw that the downside channel broke. We came back. We tested as support. So you're automatically looking for the recovery. How high that recovery gets on a pair like sterling yen, It's tight. So, last week's price action wasn't all that convincing as far as any type of, let me take a step back, not last week's price action. This week's price action hasn't been all that convincing with regards to any type of session opening ranges per se, so I haven't really been liking what this thing is doing. I still do think the rebound may have more to go. That's just based on the momentum profile, which continues to hold 40 support all week long. Downside triggers not really giving you those plays. And that's another thing, guys. Let's say you're looking at a scalp and the downside trigger keeps giving you, and you keep taking the short, but it doesn't pan out, right? Price action doesn't follow through. That's a tell, too, in near-term price, that those triggers are not offering the plays. The triggers are not prompting, okay, a little bit more of a slip in price. So when you see something like this, automatically start to trim your expectation for the short side. And this is why our focus still remains for a possible rebound higher here in sterling yen. I'm just not a big fan of being short, necessarily the yen. So that's my issue here with sterling yen. DB, does that make sense? The levels haven't changed, actually. The levels haven't changed. So if you click on that report from last week, we're still looking at all the same targets. All right. I shorted Sandy says, the French 40 with the London Open. Let me take a look at what that looked like. Yeah, you get into the exotic, Sandy. Let's take a look. DB says, yes, I already cut half my shorts from 184.50. And you're talking about sterling yen. Oh, beautiful. Yeah, you played this long term, man. Well done. Well done. Medium term trader. Makes sense. Makes sense. You find these helpful though, right, DB? Sometimes on looking at the closer time frames and the closer structures, even when you're in the longer term position, right, helps you time the exits a little bit better. I've been told that. Timing the exits and entries. He just wrote it. All right. Awesome. Awesome. Yeah, there's really a good synergy between the type of analysis that me and Jamie just because of that very fact. But you're looking at the French 40. Where's the CAC 40? Where are you at? Oof. Well, I don't really follow this, Sandy, but we can, again, take a quick gander. The London Open. Oh yeah, that was a beautiful play right there. Depending on whether you used this as the actual London Open or whether you used this as the London Open, this would have been obviously the more favorable trigger, and that was accompanied with the 50 break in momentum for the first time on that session. That was a beautiful entry. But even if you used, the lows for the futures markets, and this is again marking 3 o'clock, I think, on the platform here for FXCM. Even that break, right, was a very clear-cut trigger break in momentum. You see that? And I'm just going to the beginning of the green line, guys. This is, again, get that Trade Sessions indicator app. It can help you out trying to identify each session higher and low. But, yeah, that was a beautiful tell. Now, again, Sandy, opening range break. You're looking for that late session low. I wouldn't say it's late in Europe, but it's getting towards the end of the session. Divergence into the low. Okay. And it looks like you're trying to make a trigger break here. This already broke, actually. Yeah, if you see a 40 break and a break above the U.S. opening range, that would be your tell to get out. But I'd be booking profit, bringing stops in, and cleaning up that position right around those levels. So, Sandy, hope that helps. Just based on the momentum profile and what we're doing in price, that's it. I have no... I'm not looking at any key levels from a technical standpoint necessarily down here. I sure as price came back into Asia. just want to see something real quick. It's interesting because equities still look like it could turn over. So, like, for example, if we take a look at the NASI, or which is currently testing operative current median line support, we came into this earlier. That looked like it was about to fall off the side of a cliff when I saw this break here on Thursday of last week. If you put this to a line chart, look at that, guys. That doesn't get much closer than that. So I still think there is definitely a risk. This is something we were watching on the SPX. Again, really sloppy here on this sail through this key inflection region we were watching all into the start of March trade. But this is why, as we get back into the end of the month, guys, it's just prudent to be a little bit more cautious and a little bit lighter on the leverage. So I hope that answers your questions. DB, I got the SPX, and I didn't get the DAX, German 30. This is the last time I looked at the DAX. Again, I'm not really active in the crosses as much, or crosses in the on the CFD side thing as much. Yeah, it didn't even have a parallel that caught that one. But again, consolidation. You made a break on a lot of these equity markets. The actual opening range broke and made a beautiful play into a high. We retraced it, checked the opening range high, and we're just sitting there. This is the same thing that we're seeing here on the German 30. Again, I wouldn't do anything here today, guys, even from a scalp setup, specifically on the equity side of things. If you think I'm reluctant in FX, I'll definitely be reluctant on equities. Not my game, not on the last day of the month, not on the last day of the quarter. So I have no opinion or interest in trading any of the equities indices today. I'll sit this out and let's see how the April opening range looks. That being said, watch the sterling crosses, watch that euro-yen trade as well. I do want to take a moment and talk about gold just because of where we are in the grand scheme of things. Here's what gold looks like on the weekly chart, guys. The focus was still on the rebound that we made off of this key outside weekly reversal off of a major critical support barrier. We just published our daily FX quarterly projections, so you'll be seeing those on the wires in a few days. But on the intraday chart for gold, this was the fallout zone. Oh, this is the previous weeks. This was the fallout zone for gold. It was 1195, 1198. Do you remember that zone on the way up? It broke. It went right into the median line parallel, and then we sat there as support. We closed Friday just above it. We opened the week, given out. Okay? Here's what it looks like on the daily chart. All right? So resistance could come back and pull us right back into 1195. I noted in yesterday's piece that the near-term support, you could find some support at 1177. What was today's low? 1178. Ooh, just missed it. 1177 actually turns out to be the 2014 low day close, guys, that you made on that stretch into the lows right here. The close of that session was right here at 1177. So it might be a level worth looking at. Today's low is 1178, just $1 off that level. The end of the day, you stay constructive above here. I know that sounds weird, and that's not really the majority of what everyone's thinking. You could see a drop into that region. I'm not interested in necessarily playing the short side, but this is where you invalidate the long side bias. This was big, and you don't want to ignore the fact that the weekly chart is staring down the barrel of a major critical support that also meshes with the lows that you made for 2014. So don't underestimate the breadth of the rally. Don't underestimate the volatility you can see heading into Friday. But broadly speaking, watch the dollar index. As the dollar index sits at that support barrier, it's going to be a nice mark here and could be a nice tell on gold. All right. Guys, we'll wrap it up here. We went overtime today, as always, but we'll be back tomorrow at 8:30 again to follow up on these trades, to see where we are in the grand scheme of things, and to keep us updated as we head into Friday's highly anticipated non-farm payroll print. Guys, have a great day trading, and I will see you all on the morrow. Cheers.